Welcome to FinSights Daily by Finvestin, where we cover the daily updates from the world of finance that impacts your day-to-day life. I'm your host Narendran. Quick reminder, play this episode at 1.5x for a better experience if you are short on time. Today we are exploring financial dynamics that could reshape your portfolio strategy. Will escalating border tensions crash our markets? Is silver financially ready to outshine gold? And could China's revolutionary gold ATMs transform how Indians monetize their precious metals? Stay with me as we unpack these burning questions affecting your wealth this episode. Border tensions and market impact. Our first focus today is the intensifying situation between India and Pakistan and its financial implications. The recent terrorist attacks in Pahalgam, Kashmir, triggered immediate market reaction with Nifty 50 shedding around 200 points, approximately a 1% decline. Let's examine this through a historical lens. During the 2001 parliament attack, market corrections remained under 2%, demonstrating remarkable stability during the crisis. Similarly, both the Uri surgical strikes in 2016 and Balakot air strikes in 2019 caused only temporary market fluctuations before recovery. Renowned economist Swaminathan Iyer points out that controlled military responses typically result in minimal market disruption. However, any uncontrolled escalations could introduce significant uncertainty, potentially triggering capital outflows, currency depreciations, and decreased foreign investments. The current scenario shows some concerning differences from the past events. The India VIX has surged 11% in just 1 week, signaling heightened investor anxiety. We are witnessing targeted impact across specific sectors like tourism dependent stocks like hotels and airlines face particular pressure as Kashmir's appeal diminishes amid security concerns. Defense spending implications can't be overlooked either. Global military expenditure reached an unprecedented $2.7 trillion last year, with the US contributing 37%. India now ranks fifth worldwide, allocating approximately $87 billion to defense. This reallocation of resources could potentially divert funding from developmental projects affecting long term economic growth trajectories. And market experts predict that border tensions could wipe out 5 to 7% of market value if diplomatic efforts fail. But historically, these dips have created India's best buying opportunities. Are you prepared to capitalize? Let's shift to the silver lining, that is a precious metal opportunity that's perfect for this Akshaya Tritiya. While everyone's focused on gold's meteoric rise, silver sits quietly in domestic markets. It's trading at 97,712 per kilogram, following a modest 0.04% uptick. The most compelling factor here is the gold to silver ratio. The gold to silver ratio measures how many ounces of silver is taken to purchase 1 ounce of gold, with the current 100 is to 1 ratio versus the historical 70 is to 1 average ratio, suggesting silver is undervalued and may rise to restore the natural balance between these precious metals. Consider the performance gap. Gold has surged 40% over the past year, while silver gained just 20%. Why this disparity? The Silver Institute explains that current macroeconomic and geopolitical conditions have enhanced gold's appeal as a monetary safe haven, overshadowing silver's industrial utility. Institutional investors and sovereign funds consistently favor gold for its liquidity and traditional diversification benefits. This creates a potential opportunity. With gold prices unlikely to tumble, the elevated ratio indicates silver prices could climb to restore historical equilibrium. Recent developments in US China trade relations add another positive dimension. President Trump's signal towards tariff reduction and China's exemption of certain US products from hefty duties have fostered optimistic market sentiment. Also, Trump's announcement about a closure of trade deal between India is also another positive wave happening. Historical patterns suggest silver could be preparing for a dramatic catch-up rally that smart investors are positioning for now. And now to our final segment, gold, an innovation that's revolutionizing gold transactions in China. Imagine walking into a mall with your gold jewelry and walking out with cash in your bank account 30 minutes later. No paperwork, no waiting periods. This is not science fiction. It's happening right now in Shanghai. A cutting edge gold ATM developed by Shenzhen based Kinghood Group is drawing extraordinary attention. The machine processes gold items weighing over 3 grams with minimum 50% purity. It melts the jewelry, analyzes its composition, and transfers payment directly to the seller's bank account based on current rates. The response has been overwhelming. Appointment slots are completely booked through May as Chinese residents rush to monetize family heirlooms amid record high gold prices. This technological breakthrough eliminates traditional friction points in gold transactions: paperwork, authentication delays, and negotiation uncertainty. The concept has generated considerable buzz among Indian consumers as well. In social media platforms are filled with enthusiastic comments like, "Wow, hope we will see gold ATM in India soon." Others express practical concerns. Great product for India, but also a chain snatcher's delight, highlighting security considerations that would need addressing in the Indian context. For a country with the world's largest private gold holdings, this innovation holds tremendous potential. Indian families possess approximately 25,000 tons of gold, much of it in jewelry form. A similar system could transform how this enormous wealth reserve is assessed and utilized, especially during financial needs or when prices peak. On this auspicious Akshaya Tritiya, we have explored three critical financial trends: border tensions, creating market volatility but potentially buying opportunities; silver's undervaluation relative to gold, suggesting investment potential; and China's technological innovation that could transform India's relationship with gold assets. Whether you are adjusting your portfolio for geopolitical uncertainty, considering silver allocation, or reimagining how your family gold could become more liquid, these insights might enhance your financial decisions during this traditional prosperous day. Well, that's all for today's FinSights Daily. Thank you for joining me. This is Naren signing off. I'll see you in the next episode with fresh updates from the financial world. Have a wonderful evening and remember, stay financially savvy.